Hey, this is for entertainment purposes only. Let's do a financial analysis of PayPal. Their quarterly's coming out. Now, I had meant to get this out a while ago to prepare for this quarterly, but sadly, my laptop broke and I had gotten sick with you know what, and so everything got delayed and a little bit crazy, but I thought I'd just post this before PayPal announced their next quarterly, and if you wanted, please let me know and we can do a follow-up with the next quarterly or the current quarterly so we can see kind of the progression of what's happening with PayPal. Okay, so if we look at cash and cash equivalents, you can see a huge increase from $5 billion to about $8 billion from, last quarter to this quarter, the end of December to September 30th. So that's about, like 9 months. That's quite a big difference. Now, in terms of short-term investments, though, you can see that those have kind of gone in the opposite direction. So presumably, they've moved just their short-term investments to cash and cash equivalents, which is why you have to kind of keep your eye on some of these numbers and see what's going on with companies and where they're moving their money around, especially financial companies, really important. And so when you look at total current assets, nevertheless, as much as there was that movement, you can see that it's gone from 51 billion to 54 billion. So they have increased about $3 billion, not quite 10%, right? 10% is 5 billion, but 6%, something like that, which is pretty good. When we look at the total assets, and that's what makes up the bulk of it, it's gone from 70 to 74 billion. And so if we look at liabilities and equity, we can see that the funds payable and amounts due to customers has gone up, $2 billion. And that is the reason for the total liabilities to have gone up $2 billion. But nevertheless, their total assets far exceed their total liabilities, and their total current liabilities of 40 billion are exceeded by their total current assets. So a really just based off of this, the balance sheet looking good, looking very positive for a financial institution, and you'd think that would be necessary for a financial institution to have good money and balance sheet situation, but we've seen obviously where that's not always true. Okay, so in terms of revenue, you can see the revenues growing, which is pretty good for each quarter, and you can see transaction expenses have actually gone up. Now, this is the expense, not that they're charging their clients, because you can see it's an operating expense. That's something they have to pay. Now, why do transaction expenses go up? We'll probably talk about it a little bit more, but presumably what's happening is when you're moving money in and out or paying PayPal as a customer, what's happening is you might be using a credit card. More people are using PayPal, but they're obviously getting expensed by either banks. That would be a really bad situation, but more likely credit cards. And so as that goes up, that means that PayPal's losing some of their money because they have to transfer some of that money, I suppose, to credit cards or whatever financial institution. So that's something to really keep in mind, because that is a huge increase, right? That's a 25% increase, whereas you don't have that. You have a $700 million increase in terms of revenue, and you have a $500 million increase in terms of transaction expenses. So that to me is kind of like a big red flag when it comes to PayPal. Why is this happening? Is this temporary? What is going on exactly with these transaction expenses? Because that could really sink a lot of their increase in terms of revenue. And so at the end of the day, as much as they increased $700 million in terms of revenue, they increased $100 million, maybe, not even. We're talking $70 million in terms of operating income at the end of the day. And that's pretty much what translates into the net income. Okay, in terms of cash flow, so you can see their net income of much nicer, the 9 months from 2021 to 2020, right? 2.6 to 3.3 billion. So that's a pretty nice increase. In terms of net cash provided at the end of the day, it's pretty much just flat. And so you've been seeing those revenues increase. So what's going on exactly? Well, you can see that so when they're adjusting their income, right? When they're bringing their income up or down, you can see transaction credit losses. So that has, I suppose, been more positive in the past for their cash. I don't know if this is an account or not, but nevertheless, that's obviously a big difference. And so you're going to have to figure out, why are their credit losses or transactions not paying off as much? And presumably it's because of those expenses. That's what I'm just going to assume. The more information you have, the better. But sadly, you have to work with what you have sometimes. In terms of net gains on strategic investments, so you can see that previously I don't know if, see, this is the tricky thing when you're talking about net gains on strategic investments. I don't know if I would call this exactly losses or not, because this is really what's happening with the cash. So they're moving cash into these situations, or are they actually losing money and they lost much more money previously compared to now, and they're doing better now? Or is this just moving into the account? So usually when it happens, usually when you adjust cash flow, it's just things moving in accounts and not necessarily what's going to happen to the strategic investments themselves. Like, how did they offer cash? Well, maybe there was just more cash put into them than was taken out, but maybe they're positive. So you have to be a little bit careful with these types of things, and we'll see a little bit more as we go through their whole quarterly report. Now, in terms of their other assets and liabilities, interestingly enough, you can see that has gone up significantly from $250 million to $1 billion, almost $900 million. So that's pretty interesting. Now, when we're looking at cash flows from other things, so you can see purchases of investments, you can see now that has gone up about $2.5 billion just in terms of purchases of investments. And the maturities and sales of investments has also been quite large. So previously that was 19 billion. Now it's 30 billion. So it's almost the same amount of what they purchased matured. And so presumably they're rolling all of that forward, right? That's why they purchased so much. So in reality, it's only a $600 million increase in purchase of investments as far as I would look at it, because presumably they've already had all of that mature and they're reinvesting those maturities. So it's $600 million more. That's kind of the way I look at it. And that makes sense with the previous point we were mentioning about the cash flow, that extra $600 million, well, roughly, there's going to be give and take in other accounts where that goes. And in terms of acquisitions, you can see that before it was 3.6 billion, now it's only 500 million. So they're not acquiring that many companies. They're slowing down maybe in terms, or saving up to buy another company, whatever that might be. In terms of net cash used in investing activities, you can see there's a pretty big difference, but that's mostly because there were so many maturities offsetting things. And of course, they didn't buy a company, so that makes sense. In terms of financing activities, you can see that they previously were borrowing under financing arrangements, $7 billion, whereas this time they're not. I personally like that. And they were repayments, of $3 billion for their financing arrangements. I personally like that they're not bothering with that because they have so much money, right? That's what I'd like to see, that they can just, they don't have to borrow, put themselves into issues, things like that, and they can just use their money to make money. Always makes me feel a lot more comfortable. But, lots of companies, push the limit in terms of making as much money, taking a little bit more risk. So I don't hate them for that or discount them, but it's just something personal, I suppose. Anyway, funds payable and amounts due to customers. Okay, so before it was 8 billion, now it's 2.5 billion, right? So that's interesting. Why is there such a huge change there? In terms of net cash provided by financing activities, so before it was 10 billion, well, that 7 billion in terms of borrowing, well, that'll do it. And in terms of only $186 million in financing activities, well, that's because, to me, they're doing quite well, right? Their funds payable and amounts due to customers doing well. Everything's doing quite well. And at the end of the day, when you're looking at how much cash they have, they've gone from 17 billion to 20 billion. So to me, that's a pretty positive number. And that's with investing more money into their their purchase of investments, whatever those might be. Okay, now when we look at geographically, how does PayPal kind of operate? Where is their market? I don't know. I find this interesting that United States, right? You've seen this huge growth from 2.8 billion to 3.4 billion. So when you think about doubling, okay, that's 5.6. So maybe that's not that much, but a 50% increase, that's pretty much there, right? 50% is 1.4 billion. So that would be 4.2 billion. So you're getting pretty close. That's pretty astounding numbers for those 3 months. Now, when you look at United Kingdom, kind of stagnant, going down a little bit for the 2 quarters being compared from 2021 to 2020. But when you look at the 9 months, maybe there's some growth there. Okay. Now, what I find interesting is when you're looking at the other countries section, which is smaller than the United States, right? It's 3.4 versus other countries, which is 2.1. So the other countries, there is no other country that generated more than 10% of the total revenue. And so that means that they're really diversified in those other countries, presumably, because you're getting $2.1 billion, and yet that's not making up more than 2% at 10%, which is about $600 million. And obviously, the United Kingdom was separated out, right? This is important. They were separated out. It doesn't quite reach that 10% threshold, but, if they were willing to separate out the United Kingdom, maybe because in 2020 they reached the 10% threshold. But obviously, whatever the other countries are, presumably they're around there or less. So, like I said, to me, very well diversified, but obviously very well concentrated in the United States. So if PayPal or the United States has issues, I should say, then that will affect PayPal. And obviously, a lot of their business is in the United States, but obviously they can also grow, presumably. Now, there's going to be competitors. There's going to be similar companies. So they're going to have, their issues, but obviously PayPal's connected to eBay. Pretty interesting, though, from my perspective. Now, in terms of goodwill, they acquired Honey Science Corporation. So the goodwill on this transaction was $2.9 billion, and the total purchase price was $3.6 billion. So obviously, they quote-unquote overpaid an enormous amount for Honey Science Corporation because they really wanted it. Now, my guess is it's because they have so much name recognition, brand recognition, and I presume that maybe they want to use that customer list, that customer base, and maybe they're going to grow PayPal. And this is pretty interesting, right? Because if you can imagine all of these customers coming with their desire, with their coupons, coming to businesses, you're being able to track all of those purchases. And perhaps you can now also track, how are they paying? How much are they paying? Did our customer use PayPal? Did they use a credit card? When, why, where? That could be pretty useful information for PayPal, even if obviously they don't sell that information. Just owning that information and learning about their customers, or other customers for that matter, and what everyone's doing could be extremely useful. So pretty interesting acquisition, and it makes sense why they would be willing to overpay, quote unquote overpay, for the acquisition, as far as I can tell. Even if Honey doesn't grow, and I assume it will, but even if it doesn't grow, well, at the end of the day, this will probably help PayPal itself grow, right? That's what I would want. And the question I would also have is Honey in some of the other markets. I've seen it a lot in North America, but if you get into Canada, you get into other markets, well, then that gives an edge maybe to PayPal expanding there as well, if they can somehow convert some of those users to PayPal. Okay, now in terms of their financial statements, they mentioned that they sold their data center, and they're going to operate on an 8-year lease. So this is kind of interesting. This is kind of like, what Coke or other companies will do. They'll sell the bottling plant to someone else, and they'll license the rights pretty much. So they're going to let someone else worry about it. They're going to separate that whole thing from their company. They don't have all the liability. They don't have all the fuss. So I'm guessing that's what PayPal did. It's kind of interesting to me because, obviously whoever they sold it to is going to try and make as much money as they can. But that's the way PayPal is working, and they're removing a lot of the risk from themselves. And I guess in terms of where their expertise is, they're focusing on PayPal, right? So that's pretty interesting. Now, in terms of their fund receivables on customer accounts, so you can see that cash and cash equivalents going down a little bit, but in terms of available for sale debt securities going up. Now, what are these available for sale debt securities? I assume, I don't really know, but there's money, I suppose, floating around, or transactions floating around that's going to allow them to sell these types of debt securities or loans or borrowings to, or lendings, I should say, to customers. In terms of short-term investments, you can see that it's about the available for sale of debt securities has gone down from 6.6 to 4.3 billion. And you can see in terms of long-term investments, has gone from 2.8, has actually gone up to 3.2 billion. So kind of interesting where they're looking at their available for sale debt securities and how that kind of breaks up, I suppose. Now, in terms of what are they doing with their money, you can see that a huge chunk of it is U.S. government and agency securities, right? So $9.1 billion. That's a huge chunk, and a smaller chunk, $3.9 billion, into corporate debt securities. So, when you're looking at this type of situation, what you have to wonder is what's happening in terms of, let's say, inflation, what's happening in terms of corporate debt, right? Are you scared that companies aren't going to be paying their debt? Now, obviously, they're presumably not loaning large amounts of money to any one company. So on one hand, they're diversified, which is great. But on the other hand, if you see this reckoning for companies, that's going to be a big red flag. I don't see that. But I do see the U.S. government and agency securities. I think those might have trouble being sold as inflation rates go up, but that's the way it goes, and they can just hold on to them and they can just mature at the end of the day. They won't lose money, presumably. Now, they might lose money to inflation, and that's kind of what would make me nervous about PayPal. And I would love to know how much of that money is really being held in U.S. government and agency securities. And of course, what percentages, what are we talking about here? But presumably, it's just being kept safe, I suppose, for customer accounts, right? You can't be aggressive with it. So that, on that hand, it makes a lot of sense. What else can they really do with it? You can't take serious risk. In terms of short-term investments, they have corporate debt securities, and you can see that here it looks like they are taking a little bit more risk, right? 2.3 billion versus the 600 million in U.S. government agency securities. So you can kind of see maybe their thinking here and how they're trying to manage making more money with a little bit more risk is my guess. Obviously not a lot of risk. And you can see the same thing with long-term investments, the same kind of idea where 1.4 billion is corporate debt securities. Interestingly enough, they have more in foreign government and agency securities. Now, I'd love to know which foreign governments personally. It's only $1 billion. It's amazing you can look at a company and say it's only $1 billion. But obviously, in terms of their total available for sale debt securities that we're talking about, that's $22 billion. So it's not a major chunk. It's not a major risk. And like I said, maybe they're willing to take more risk in these other investments when they're not looking at customer account money, things like that. So, I find that fascinating. And I guess when you're looking at things, I think corporate debt is great. I'm a little bit curious about the foreign government stuff, but it means that in terms of them making money, with more risk, let's call it. So they only have, roughly looking at these numbers, right? You look at short-term investments, you can go back to the previous slide if you really want to break it down exactly, but you're looking about 3.4 billion. And then in terms of long-term assets, you're looking about maybe another 3 billion around there, 2.7, whatever it is. It could be exactly, 3 billion. Pretty close. So you're looking at, $7-8 billion in terms of what they can be a little bit more aggressive in terms of investing. So that's less than half, right? The other half or the other amount is 14 billion. So now obviously they're not going to be super aggressive with it. They're not going to take serious risks, but just something to keep in mind. And previously in 2020, you can see that their U.S. government was 7.9 billion. Now, presumably a lot of that is that increase was just because their funds receivable and customer accounts was increased, those available for debt securities. And that's where they put it in. They moved a lot more into the U.S. government, which is interesting. And previously, there was a lot more in corporate debt securities for short-term investments. Now, to be fair, though, it's a little bit hard for me to work out some of these things. Why? Because obviously, all the numbers here for short-term investments are much bigger, right? You have 4.9, let's say 6-7 billion versus 4 billion. So you have half the amount. So in terms of half the amount, it's pretty close to where it is. So it makes sense that they're keeping that kind of risk profile the same. And it's, I guess, something they've learned to appreciate that it works well. I don't know exactly. And in terms of the long-term investments, looks pretty similar. Obviously, they put more in terms of corporate debt than foreign government. They've taken a little bit more out of foreign government. And hopefully, seeing everything happening with China and the collapse, hopefully they don't have a lot of money tied in there because they're going to have lots of trouble getting that money out, I think, is my guess anyway. Okay, in terms of loans and interest receivable, so they mention that they offer revolving and installment credit products for customers, for consumers, and when they're, I guess, buying on the PayPal platform. And this was $2.8 billion looking at the, I guess, from September 30th, 2021 versus December 31st, 2020. So I guess that's like 9 months, give or take, backwards. So obviously some serious growth there in terms of consumers willing to be able to take, I guess, some sort of loan system with PayPal to pay off and buy a product. I am assuming that's what's really going on here. But nevertheless, so there's obviously some growth there. That's pretty impressive in 1 year to have about 25% growth in that area. So it's an interesting area for PayPal to continue growing and see, how much can that grow exactly. And especially like we said with Honey, those kind of synergies, when those two things go together, that's kind of interesting, right? So you get a discount, and not only do you get a discount with Honey, but if you use PayPal, well, maybe you can kind of pay this in installments and, that type of thing. It'll be interesting to see where they go with that. Okay, so in terms of their consumer loans and interest receivable for these 9 months that we're talking about, so they talk about how their beginning balance was $300 million in terms of consumer loans receivable in September 30th, 2021 versus 50 million, right? So that's a pretty large growth. And then, when they talk about their provisions, right, there's obviously quite a big difference there. And their charge-offs, how much they're losing. So not so much different, right? 57 versus 78 million, not such a big deal. But at the end of the day, their ending balance for consumer loans receivable, right, before was 271 million versus 200 million. So, that I suppose is kind of stagnant, that number, in terms of where their balance started and where it ended. So maybe there was a lot more growth there and it started to slow down. I don't know. It's a little bit hard for me to tell exactly what's going on in terms of everything. But to me, I don't know. It's a very interesting area that might be able to grow. But is it growing as fast as, that previous number when you're looking at a year versus a different year? I'm not sure. Okay, so now in terms of fixed rate notes, you can see that they actually have an enormous amount of their debt specifically in fixed rate, right? So a lot of their debt is not moving in terms of percentages. And so that to me is a really good sign, right? So in terms of their total carrying long-term debt, right, $8 billion, well, if inflation happens, as much as that it will hurt them, it'll also help them in terms of their debt, right? It'll make it easier to pay off their debt. So that is good. And obviously, the more inflation happens, there is a very positive thing for PayPal. Although it's going to be harder for them to make money, there's also going to be more money and more transactions and more percentage of those transactions. So there's a lot of positives when it comes to PayPal in terms of that situation. Now, in terms of their future principal payments, PayPal, I think, is just fine. In terms of that $8 billion, which is not a lot, but for the next year it's only $1 billion, not a big deal. Now, in terms of their protection programs, so you can see that their beginning balance for what they have, it's pretty stagnant, which is fine. That means that they're always going to be keeping this kind of buffer of 387 million or whatever it might be, or 444. That amount of money they're going to be keeping around in terms of helping them pay off these types of situations. Now, in my opinion, like I said before, that's kind of, I don't want to see it being too stagnant. I'd like to see it actually grow with the account growth, I guess. That's really what I'd like to see personally, just to make sure that they're being safe, I suppose. But, at the end of the day, they obviously have an enormous amount of statistics, and hopefully, just the simple intuition, though. That's really what I'm trying to use here. The simple intuition in my head is I want to see more of a comfort, more of a cushion. And we saw that with a lot of banks earlier in the pandemic. What's PayPal doing now? Are they taking away some of that cushion? Did they increase it a lot more and now they can feel like they can decrease it? I'm not entirely sure. But like I said, just my simple intuition, gut feeling is you'd want to see that increase as the accounts increase, as they grow. You'd expect more losses and you'd want more of that type to be provisioned for. So that bothers me a little bit. Not a big deal, I suppose, but just something to, I suppose, keep in mind. Now, in terms of their stock repurchase program, this is interesting. They have $6.6 billion available to themselves to just repurchase stock if they'd like. I don't know if it's invested right now or not, I suppose, or if that's part of, I suppose they always have that cash anyway. But so obviously they have a lot more money to buy their stock, which will push the stock up if it goes down. They feel like it's going down too far and it's cheap, then, and even if it's not cheap, they just want it to go up. They can always just repurchase it. Okay, now in terms of their subsequent events here, they mentioned they want to expand their capabilities and relevance in Japan. And so that's why they acquired a company called Paidi for $2.7 billion. Okay, so that's what I'm talking about in terms of when we were talking about honey, right? When they can combine these different companies, and Paidi is, I suppose, a payment platform, so it's a little bit different than honey, but you can see kind of the thinking of synergies, or thinking of, well, we can expand our system over here. And if you get into the Asian market, which is obviously going to be very difficult with China, that's very well covered, but maybe some of these other markets you can infiltrate. No, I shouldn't say infiltrate, but expand into. And so it makes a lot of sense from my perspective that that's what PayPal's trying to do, right? They're trying to expand, obviously, I'm sure, in America, but they're also trying to expand in a lot of other countries where they're not really there at all. Now, in terms of Brexit, it seems to me that it's obviously going to affect them, and it's going to affect PayPal. But I think that they said that they have, as much as they have currency exposure to Brexit, but I think they're doing quite well in terms of not having a serious issue in terms of Brexit. So if you look at their net revenues from the UK, like 10%, it's not like a major risk for them, I suppose, but it's also not small, right? The UK was about 10% of their revenue. So, like I'm saying, 10%, it's not huge, it's not small. That's what it is. And obviously Brexit will affect things. It seems to me that Brexit seems to be a little bit overblown. Maybe I am very wrong about that. Very, very possible. So far, so good, though. There hasn't been any collapse that people warned of, or some serious issue that people warned of. Okay, so what's my conclusion in terms of PayPal? So one of the things that I had seen, and maybe we'll bring it up next time, is what they do in terms of, and how they make money in terms of some of their investment vehicles. And they had mentioned that when inflation, they had mentioned in their risks, when inflation, goes up, that makes it a lot risky, not a lot riskier, but they can't make the same amount of money on their investments than they can when inflation is kind of stagnant or 2% or low. And so what I suppose scares me in terms of PayPal is, I personally think inflation, even if it's going to be 2% over 10 years, like Powell's saying, I think it's going to short-term spike up quite a bit. And I think that he's willing to say, oh, well, in the long term, it's going to be 2%, so don't be scared when it spikes up. I think that's kind of what he's saying. And it might be much longer, just like inflation lasted much longer than Powell expected. Well, inflation might last a lot longer than Powell expected, at least as far as he's saying publicly. He might have known that the shipping issues would be, and that inflation side of things would be longer. He might know that inflation might go above 2% for longer. They're printing a lot of money. They have to bring that money back in at the end of the day if they want to bring down inflation. And they're not going to do that so fast, in my opinion. So I kind of see inflation going for quite some time, and it'll obviously make it a lot easier for the government to pay off its debts and everything that just happened. So on that hand, I get it, and I get what the Federal Reserve is doing. It's, to me, kind of obvious. On the other hand, what is that going to mean for PayPal, right? That's the important question. So as far as I can tell, like I said, there is this slight benefit in the sense that, well, there's going to be more money, right, if inflation happens and it actually gets into the money supply, which it is, as far as I can tell. That means that there's going to be more money, and that means there's going to be more transactions, larger transactions are going to get a bigger percentage. So in terms of that side of things, that's going up. My problem is the cost of transactions is also going up. So it's very possible that PayPal might not benefit from that nearly as much as they will lose from inflation going up and hurting their investment side and growing their money from their investment side, right? Because they have an enormous amount of cash, right? That is, I wouldn't say their bread and butter, but that is something that can make them a lot of money. Obviously, they're limited with risk, and that's obviously going to limit them, their options, especially with inflation, and what can they really do. So I guess what I'm going to be looking for with these next 10K and kind of what they're going to be speaking about, that's going to be my most important question. Not inflation exactly, but what are they going to invest in with inflation looming, and where are they going to make up this difference in terms of how they're going to actually grow their money and not just lose real money, quote unquote, because inflation's going up and let's say if they grow at 2%, but inflation goes at 4%, well, that's not going to be good for PayPal. So, as much as they're going to grow and do all these things, I don't want to see that. I want to see, and if that's what's going to happen, if they don't mention it, then I would personally, like I said, not investment advice, but I would personally not invest in PayPal at all. Just because until I know that they're going to take that cash that they have and make money and not just continually lose money, I'm not so interested, because it's almost like, as much as they grow and they're trying to grow, and I get that and I commend them for that, and I think they have a lot of growth potential, nevertheless, there's just this thing where inflation's just going to be chipping away at everything, the whole account, the whole amount of cash they have. And so unless they have a way of addressing that in terms of investment, I almost don't get it. And I suppose on one hand that question's going to be applicable to a lot of banks, but a lot of banks maybe do a lot more loaning. I'm not entirely sure. It looks like PayPal is a lot more conservative in terms of how much they're lending out and the risk they take in terms of their lending. And so I like that on one hand, but, in terms of inflation, I need to have a good answer or an understanding of what they're going to do. Okay, so that's my perspective. You let me know what you think. Thank you so much for watching, and we'll follow it up if you'd like. Please let me know if you want a follow-up in terms of the next round of the PayPal quarterlies and seeing what's going on and have things changed and what's the shift. I think it'll be interesting to see some quarterly reports back to back. Of course, I meant to have a little bit more space here between the two, but sadly, life happened, and I'm feeling better, thank God. And yeah, thank you so much for watching.